Mark, we were just talking there about the role that Nvidia plays this week, and maybe that is the thing that brings some drama. We've got no shortage of news this week, but not a huge amount of market participation, perhaps. Do you think expectations will be quite high for Nvidia, which, as you point out, is now quite a cheap stock?
Yeah, I first of all, I've got to say, Anna, I've got to apologise because I was wrong yesterday. I got so excited by the news flow this week. But so far, a lot of the news stories have really kind of died with a whimper and not really excited markets. The US-Canada trade war, everyone's kind of gone, it's another one of these slow-moving stories. Iran, it kind of has not really developed much more from the D-Day story. We've not yet threatened the yields level. So we're kind of really are still in summer markets. And I kind of thought that summer might end preemptively this week. So now we're really betting on that Nvidia to kind of bring us back that kind of volatility back to markets. Now, will it disappoint markets? Are expectations too high? I actually think it's the opposite dynamic for this Nvidia earnings. The story from most last years is most Nvidia earnings, they've been impressively good, and yet the market sells off after earnings. I actually think that, Nvidia is now at the other end of the spectrum, where it is already quite discounted. It is making that transition as an AI name, as Anthony perfectly kind of outlined, which means it's a slightly different play from a few years ago. But it's still a company which is making a lot of money. Now, it might be worries about where it's planning to allocate that money, as Anthony put it, as becoming the bank of AI is becoming more of a worry. But I still think it's going to emphasize that the AI capex bubble is still in the inflation stage, and ultimately that is supportive. So my mistake yesterday was saying that, not that I expected wild volatility, but I thought we'd get more volatility with a negative skew. We've got a little bit more volatility. I think that might continue. I'm not so convinced by the negative skew. I'm positive again.
OK, Mark's positive again. You shouldn't apologise for your excitement, Mark. That was that lifted us all up yesterday. So don't apologise for that. What about will there be additional volatility? Do you think around what Warsh has to say on Friday? How much kind of investors on edge around that event and what he may deliver?
No, I think he's going to be so anticlimactic. Now, obviously, it's with that expectation that provides the interest, because I don't think I'm alone. I think the market is a little bit divided here, but I think, and maybe we should try to quantify this a bit more definitively on the team here, but I think the majority of the market is of the expectation. Warsh tells everyone he doesn't want to provide more forward guidance. Jackson Hole is never meant to be a policy meeting. It shouldn't be talking about yields. And he's, yes, he might provide a bit more guidance on his reaction function, but I think people will be disappointed in that. I think it would be very strange of Warsh to undercut all he said in the last few months to suddenly provide a load of excess guidance at Jackson Hole. Now, I understand that Besson's already undermined him and kind of changed the game, and he might feel he's forced into a corner because of that. But I think it'll be better if he'll hold his line. So I'm expecting that there'll be very little policy commentary this weekend. We won't get renewed clarity on the Fed reaction function, and therefore that part at the end of the week will be an anticlimax. But that's Friday.